The South African Special Risk Insurance Association has received a boost after Treasury released nearly 4 billion rand to it. This is to assist Sasria in meeting its obligations until the end of the current financial year. It has already paid out billions to businesses that were impacted by the looting and unrest in July. Sasria's Executive Manager of Stakeholder Management, Muzi Dladla, joins us now to speak more on this. Muzi, thank you for making time on the lead this afternoon. How is this 3.9 billion rand going to assist you as Sasria in meeting your obligations, especially given this October deadline to settle about 80% of your claims?
Thank you, Shamit. Good afternoon to you and your listeners. The 3.9 billion that Treasury has given us, or is in a process actually of appropriating to come into the business, is made to assist us in meeting our liabilities. So pretty much means then that the claims that we've committed or that we've registered, so that by the end of the year, according to the schedule that we've put into the statement, that we're able to meet that. So that's the purpose pretty much of the 3.9 billion, to ensure that we are liquid during the period.
Yeah, but in terms of your reserves, how is it looking? Do you have sufficient reserves to meet all of the valid claims? Because questions have been raised around your financial resources and whether they can honor all the claims.
Yes, we do have enough reserves. The plan that we've put together is very much in line with that. So the 0 to 1 million, I think by this point we already have covered all of those. So we're now looking at the larger claims as well as the very, very, very big ones. So the liquidity position is such that by the end of the financial year, everything we've committed, we will have paid. We're now looking at what happens after the financial year end, which then means then that is Sasria still a going concern thereafter. And Treasury and ourselves, we put the statement together in order to answer that particular question. So the question is, obviously, Treasury has committed to giving us those additional funding, not only to meet the liabilities, but to ensure that we are solvent and we are a going concern, and we are ready, in terms of being resilient for the future should another event similar to this happen.
Yeah. Are there claims that you have rejected, and how much have you paid so far in claims?
Up to now, we've paid about 6 billion rands. And this is, if you're looking at the amount of time from mid-July up to now, we've paid about 6 billion. And that is in accordance with the amounts of money that we've committed to pay in the schedule that we've put into the statement. So we've paid about 6 billion, and we're planning to pay obviously more by the end of October in particular. The claims that are between 1 million and 30, that's where we'll be paying as well. The large ones will take a much longer period because we are rebuilding instead of just paying out cash.
Yeah, and speaking of rebuilding, what agreement have you reached with industry partners around the properties that have been damaged? Have you reached that consensus to rebuild?
Yes, we have. We've had engagements with those stakeholders in particular because that's what raised a bit of media frenzy at some point. So we've reached an agreement with the industry together with our assessors as well, the loss adjusters. So the purpose is for us to rebuild from where we are now so that we put the businesses back into the position that they were before so that they can contribute again towards the economy.
Okay. And are you anticipating any additional financial support from government beyond this 3.9 billion rand, or at this stage, are you satisfied as Sasria that you have enough to ensure that, in fact, you honor the claims and there's enough liquidity?
Yeah, the 3.9 is going to put us in a position where we are able to pay claims, but there is additional funding we're going to be getting, which will be included into the budgeting process for the following year, which is beginning of April. So what that is for, it's for putting us in a position where in the future, we don't necessarily have to go back to Treasury for another amount of money that is required, so that we are in a position to structure business in such a way that we can be able to be more resilient for the future as well. So it's in two parts, 3.9 for now, for liquidity purposes, and then additional funding for solvency purposes. So that's pretty much the differentiation.
All right. Muzi Dladla, thank you for making time. That's Sasria's Executive Manager for Stakeholder Management.